All right, there we go. I guess there's a will, there's a way. Let's get this thing going here. All right, here we go. Just needs to get the party started. All right, let me post this link for everybody and we'll get going. The link here. There's a link here. And we should be good to go. Let me go ahead and flip my screen here. Dave, good morning. Good morning to you. Hope everybody's doing well. Ed, good morning. Top of the morning to everybody. Let me go ahead and share my screen. Get this thing over here. We're good to go. We got War Dog, Robert, Kirk, Wiko, Timothy, Cam. Good morning, Cam. Awesome is in the house. I was having some issues with YouTube this morning, but finally we got it through. Wayne is in the house. CJ's in the house. Now remember, folks, I have a training session, a gap trading session today, and it's going to happen at 10 a.m. It's going to be very, very cool. You don't want to miss out. I'm going to be talking about stocks like Tesla, Netflix, IBM, how they tank overnight, and gap higher. You don't want to miss out. It's going to be happening at 10 a.m. So don't miss out on that. It's going to be very, very cool. That's right. All right, we'll be starting in just a moment. And also, don't forget, VIP room is at noon. Let me give you that link here as well. Steve, good morning. Paul, good morning. Dave, good morning. Richard, good morning. Roddy, Julian, Thomas, Gary, everybody's in the house. All right. We got more than 100 people here before we begin. Just remember one thing. I have a class at 10 a.m. today. It's going to be a red meat class. I'm going to be giving you guys, I'm going to be showing you how I've been able to get 10 winners in a row using gaps. It's going to be very, very cool. If you guys are going to be attending, and I hope you are, give me a big thumbs up. Okay, here is the link right here again. All right, and Tom is in the house. Sandeep is in the house. Let's begin. All right, it's really interesting. You know, this morning I came into my office here at my house, and I have a woodpecker outside, and the woodpecker goes, "Durr, durr," and sometimes it does 3 seconds, and sometimes it does 2 seconds. And I'm thinking maybe the woodpecker's trying to give me stock signal alerts, right? Yeah, Cam, it'll be recorded, and it's happening at 10 a.m. Eastern. Remember, customer service live from 10 a.m. to 1 p.m. Eastern time. Cam White will help you with anything relating to customer service. Good morning, Angie. Work to wonder. Hope you are well. All right, let's begin. All right, let's begin. So as you guys could see here, I wasn't extremely bullish on the market yesterday. I was very neutral ahead of the FOMC, and I also explained that volume is really low. And volume is really low. It's very, very easy to manipulate directional bias. Very easy. So although the Dow's down 150 points, I wouldn't put too much stock into this because of all the data that's coming out over the next couple of days. I think you're going to see a lot of that's right, Dave. I think you're going to see a lot of random action because we have FOMC starting today, and that's going to FOMC meeting begins today, and that's going to go and into tomorrow's consumer price index prices, and then the announcement at 2 o'clock. We're going to have some volatility. We are definitely sorry to hear about your dad. I hope he feels better. Morning, Carlos. Um, I thought you were going to say, Dave, who needs a crystal ball? You have Roger, but he says, who needs a crystal ball when you have a woodpecker, right? All right. So I think tomorrow we're going to see some volatility. Volume is low. We have a lot of Fed data tomorrow. We are going to see some volatility. Good morning, Brian. Good to see you. Happy Tuesday, or as they say, happy Wednesday Eve. So don't expect a little bit more of what we saw yesterday. Maybe a little more volume heading into today because yesterday the volume was just really, really low. I mean, really, really low. But we can expect to see a little more volume. As far as earnings, we have Academy Sports and Oracle. Um, I'm not really expecting anything major from Academy. I didn't even put it up here, but Oracle, we're expecting 7.5%. This could be a potential. I'll see how it looks tonight, but this could be a potential time spread. uh, I'll see. I'll see how it looks. We will see how it looks. But good morning, Rochelle. Good to see you. But again, that's the big stock today. And by the way, Oracle's a really important stock. It's a network stock, and it's a network leader. So when you have earnings on Oracle, it impacts PanW, it impacts Cisco, it impacts Microsoft, it impacts IBM, it impacts the entire I would say you have the hardware in tech, you have the software in tech, and then you have the chips. Well, this impacts the hardware, non-chip hardware segment quite a bit. So Oracle is a really important stock to look at because, again, it can impact other companies. If you guys have been trading stocks like I have all the way back into the 90s, you would remember Oracle was a S&P 500 darling along with Cisco. It's still a very instrumental stock. Tomorrow you have AVGO. This will impact chip stocks quite a bit. Although I think the FOMC and the CPI are going to outshadow it, but you got to pay attention to it. And Thursday you have Adobe, and again, Adobe is very similar to Oracle, except Adobe doesn't deal with the hardware aspect of it; it deals with the software aspect of it. So if you look at these three earnings on their own, it's not a big deal. But this encompasses the entire QQQ right here. You have the hardware non-tech, you have the hardware non-chip, you have the software right here. Excuse me, I said it backwards. You have the hardware non-chips, you have the hardware chips, and here you have the software right here. So you have a lot of technology over here, and technology is actually doing really well right now. But you do have technology right here, and something we have to pay very, very close attention to. Very, very, very close attention to next couple of days. Not because on their own they're so big, but because we have a combination of very low volume right now. There's subdued activity. There's not a lot of institutions out there trading right now. They're waiting for the CPI, so we have to be careful because it's very easy to move and manipulate the market. And when I say manipulate the market, I'm not talking about a coup de grace that lasts 5 days. I'm talking about it's very easy to move the market a few points to trigger sell stops or buy stops. In other words, it's easier for institutional and large traders to have their way with you. Okay. And I mean that, to have their way with you. So don't give them that opportunity. Okay. Trade smaller and be more nimble right now. How about market volatility? How's volatility looking right now? All right. Well, volatility, we'll just kind of clean this up a little bit here. Volatility is in the low end. I'm watching these levels in case we have some negative volatility, but as of right now, I'm not really seeing much. Matter of fact, you're not really seeing volatility overnight. You could see here overnight, you could see it's going down. So the fact that we're having the Dow down 150 points and NASDAQ, there's not a lot here. Also, again, volatility is going down. It went up this morning. This is middle of the night right here. This we closed yesterday. This is volatility middle of the night, but now it's starting to come down. So volatility is higher, but again, I don't know if volatility is higher because of negative global news or if it's because of earnings, but there's just not much going on in the markets, and I'll kind of rehash that when we talk about the reports. And again, in case you're just coming out here, I have a class. I don't usually do this at 10 a.m., but I'm having a pretty busy day, and I'm going to be trading today live at 10 a.m. with you guys, doing a class at 10 a.m., and I'll talk about some gap stocks that I'm really interested. If you guys don't realize, I trade a lot of gaps, and gaps is one of my best strategies. So I'm going to be talking about that, and I'll show you the exact strategy that we were able to get the last 10 trades, 10 out of 10 winners. Do you guys like to see strategies that get 10 out of 10 winners? If you do, check out that class. It's happening at 10 a.m. today, okay? All right. In terms of intraday volatility, we're just kind of sitting here. We're at a heightened level here. I don't see us going all the way down. If anything, I see volatility picking up. The next major level up in volatility is 1368, and then the next level above that is say 15. If we go above 15, the next level is 16, and if we go above 16, we're going to danger zone. So as long as we stay below 16, 15, 16, we're going to be in a good position or a fair position. So you got to keep your eye on volatility over the next few sessions, especially over the CPI and PPI. And one of the best tricks I can give you is if you see volatility subdued, but you see the market making exaggerated moves, you rely on volatility. Volatility is a little bit more stable because volatility, this right here measures the at the money fear in the at the money S&P 500 options. There's nothing that will give you more sensitivity to market movement, okay, except the actual asset, than the sensitivity of the at the money options in the S&P. They are very, very sensitive to what's going on right now in the market. So you want to pay attention to these. And what you may want to do is put them on a 30-minute basis and just keep an eye on them intraday. Like yesterday, we gapped up, and then we went all the way down, filled the gap, and now we're back up here. So it's been a very tumultuous 24 hours, I would say. Not 24 hours, 12 hours. I mean, this is not too unexpected. Mind you, look at where we stopped. Right at this level right here. So it pays to pay attention to these levels right here. So I guess the next level is right where we're at right now. Here, right there. Right there. So pay attention to volatility, and pay attention to right here, this third. I would honestly just say pay attention to 1366, 1488, 14 high 14s, like 1488, 1490. And I would say just 15. Just make it 15 to make it easier for yourself. And right here, 16. Okay? 16. All right. That's that. Now, what about commodities? How are commodities doing? Well, let's first talk about the bond market. The bond market's get going a little higher, filling in the gap. We really screwed the pooch and fell. Remember when I told you last Friday that I think we're topping out here and then we're going to go down? Well, I think the downside's not over, but we have to have the CPI and the PPI. Now, we bounced off of the quarter to date VWAP yesterday. Here's the April VWAP. We didn't bounce. I mean, we didn't touch it, but we almost did, and we almost bounced off of it. So that is the new support level here. That support on TLT is now at 90.28. That's the level, 90.33. So we're now between the yearly VWAP and the quarterly VWAP. Let me just put this here. Right here. You could see it right here. And it happens to be that we're also between the 200-day and the 100-day, the 50-day moving average. And the 50-day moving average and the quarter-to-date VWAP seem to be agreeing with each other. So we basically bounced off the 50-day moving average and the quarter-to-date VWAP here, and we're now midstream. Now, does that mean we're going to come back up here and the odds of the kid and the hope? Remember, if this goes up, that means the odds that the kid increases his hope that he's getting the bike. As we go down here, the kid decreases his hope of getting the bike. So I find it kind of odd that the bond market is higher today by a little bit, but it is a little higher today. And at the same time, you have the stock market down over 100 points, and volatility is now volatility is coming down, but volatility was spiking all night long. So I think it's something to do with global economy or just arbitrage. I'm not seeing anything major there. And again, bonds going up means the Fed is closer to lowering rates. Bonds going down means the Fed is further from lowering rates. Does today's trading action mean a lot? No. Why? Because we have the FOMC and CPI today. So do I put a lot of weight into this? I put zero weight into this. I want to see this below the 90-40 level, or I want to see it above the 92 level. Do I think we're going up? Hell no. I think we're going straight down. JB says, any thoughts on effect of Saudi not renewing petrol agreement with U.S. linked? No, I don't have any comments on that now, but I'm going to talk about crude oil in a minute. I don't have any fundamental comments yet, and it wasn't on my morning feed, as we will see in a minute. But I appreciate you bringing that up here. Thank you, JB. That's nice. I mean, it's relevant. I like anything that's relevant. I'll talk about. All right. What about crude oil? Let's talk a little bit about crude oil. What is crude oil doing? Should we be now getting back into energy stocks? Well, let's see here. Energy has been rocking and rolling, and it's now above my level here, which I kind of like, but not so fast. We're literally sitting right now. I want you guys to see where we're at right now. We're pulling back right now. If you look very closely, we are approaching the 100-day moving average, the quarter to date VWAP. Not today, Thomas, tomorrow. Here, look. Tomorrow, press conference, Wednesday. Everything you guys want to see, it's happening tomorrow. The CPI, the PPI. That's why today is going to be a quiet day in anticipation of what's happening tomorrow. Big institutions and hedge funds don't want to put big bets ahead of the CPI and PPI. So let's continue. Crude oil. We're getting very close to the 100-day moving average. We're getting very close to the year-to-date VWAP, which is right here. We're getting very, very close to the quarter-to-date VWAP. There is 3 levels of resistance on top of us right now. I am not anticipating higher energy prices in the foreseeable future unless we have a fundamental change. What I am expecting is us to bounce off of this level and come back down or stay in this area. I'm not expecting upside right now. Now, that may change with the PPI, and that may change with the consumer sentiment report, and possibly with the PPI. But I'm very, very skeptical that the energy market, after going from $72 to $78 a barrel, can overcome these 3 resistance levels. That's 3 resistance levels. And this is the 50-day moving average. So it has to overcome the 100-day, the year-to-day VWAP, the quarter-to-day VWAP. Aren't you guys glad you guys know the significance of these VWAP levels now that you took my class? And if you guys haven't taken the class, remember, Thursday we have a live session. You could still sign up for my class and take the evergreen version, which I highly recommend everybody does. But if we get past this, we've got the 50-day moving average. So you have a shitload, excuse my French this early in the morning, but you guys have a ton of resistance for the energy market, a ton. And right now, with the volume being where it is, and I'm very, very skeptical that we're going to get above these levels. Look, we tried going above these levels once, twice, 3 times. And again, we have a lot of resistance here. We have a lot of resistance. Look, quarter to date, year to date, 100-day moving average, 50-day moving average. That's a lot to. So if we can get above the 81 level, we're going to probably go higher. But I'm very doubtful that we have the firepower right now to go above this 80 level. And you could see why. What about gold? Let's look at gold. All right. Well, gold is creating a little base here. We don't really have a lot of value here. We have some value here. Most of the value is down in this area right here near the 100-day moving average. Similarly to silver, for this to come through, we have to go above the 8-day EMA. We have to go, which is not a big deal, but we have to go above the quarter-to-date VWAP, the year-to-date VWAP, and we have to go again above the 50-day moving average. So there's, and by the way, the highs are getting lower. So I would be very, very careful with gold right now. Now, there's 2 ways to look at gold and energy markets. If the economy is slowing down, then gold and energy prices are going to become weaker. If the economy is not slowing down and Fed is just controlling interest rates, that means we could see another spur up in the gold market. Cam says, I will demo installing year-to-date and quarter VWAP scanner tomorrow. Session will be recorded. Yeah, I just got mine yesterday. I put it on my dashboard next to the Pro Trader dashboard, and it's awesome. I got one screen. I press refresh, And I instantly have on one view, I have one column that says quarter to date VWAP and another column that says year to date VWAP. And if it's there, if it right now in real time, if it's there, it'll highlight green. Isn't that cool? I mean, it is so cool to have that. And guess what? I did you guys a solid. I didn't just apply it to the S&P 500. I applied it to the S&P 500 plus the non-S&P 500 stocks that are liquid, similarly to what I did with the Pro Trader dashboard. So I gave you, I didn't even promise or say I was going to include this, and I could easily sell this for extra money. I'm not going to do that. I'm just going to give it to you guys as I promised. Why? Because I want you guys to have the good stuff. At what time so I could schedule work. So anyway, and then on Thursday we'll have a live session, and you'll see how the Pro Trader dashboard and how the full-time trader scanner, the VWAP scanner, helps me find trades. So it'll be cool. The reason I picked Thursday is because it'll be after the PPI. We should have some volatility, but we shouldn't have too much unforeseeability. All right. All right. So yeah, no problem, guys. And remember, I have a class today at 10 a.m. because I want to get ahead of this volatility, and I want to give you guys my favorite. I'm going to give you my hit list right now for gap to green. If you guys attend this training, that's what I'll be giving you, my hit list for gap to green, where we've had 10 winners in a row. That's happening at 10 a.m. today. All right. And Matt's he's gonna record something and post the code in the members area. He already told Ileana to post it there, Cam. So it should be there. And he said he's gonna record a video today. So that's happening today. He finished it last night, like at 3:30, 4 o'clock in the afternoon, or somewhere around there. So just give the guy a break. Give him and send Matt a nice thank you note. He will appreciate it. All right. So gold and crude oil. I like what I'm seeing, but I'm seeing a hell of a lot of resistance here. A lot of resistance here. A lot of resistance. So if that's the case, we might have peaked out for the foreseeable future. Also, I hate to use this on you, but there's a head and shoulders pattern on gold right now. There's a shoulder, and there's a head. That is not good. All right. Crude oil, we're not seeing that yet, but this downtrend is not good. And the fact that we're making lower highs, and also the fact that this trend line matches, is not good either. So there's a trend line here. There's a hell of a lot of resistance here. And fundamentally, it looks like we want to go sideways right now on gold and in a downtrend already on the energy market. Again, this could change pending tomorrow's report, but I got to tell you what I'm seeing. All right. Got to tell you what I'm seeing. And bonds are in a pinch right now between the 200 and the 50-day moving average. They're between the VWAPs, and we're just in twilight zone pending tomorrow's report. What do I think is going to happen tomorrow? The Fed is going to say, we're hearing that there are some issues potentially with employment, but the last job reports was very, very solid. And we're going to continue our trajectory. And then they're going to talk about how more likely than not, they're going to just take it one step at a time. And they're going to keep rates as they are. And they're going to say how we're probably going to have 1 or 2 rate drops this year. And that means there's not going to be anything in September, more likely. And this will start coming back down. Again, I'm trying to give you guys the full Monty. All right, let's talk about stocks. All right. And then I'll talk about global economy, and we'll finish off with our stocks. So NASDAQ is, notice this, very, very choppy. 4 days of choppiness and consolidation. Why? Because we have a major report this week and we have low volume. Look at the trading session, folks. This is let's see here. This is the 5th of June. Look what the NASDAQ's been doing for the last several days. Just nothing. 1 session, 2 session, 3 session. Can you make a lot of no problem, Modi. I appreciate it. Thank you. Do you guys notice there's nothing happening? You can't take these numbers. You can't take these numbers with a big grain of, you got to take them with a grain of salt. There's just nothing happening right now. There's nothing happening right now. What about the SPY? What's going on with the SPY? Again, nothing happening right now. Don't try to make something out of nothing. The worst thing you can do in the market is, and this is why I tell folks, don't like look at the market every 5 seconds. The market will manipulate. The market is a master manipulator. The market is a master manipulator, and it plays on your emotions. The market is like pulling on your emotional strings. It's like a puppet. It's like a puppet master, emotional puppet master. Don't let it do that to you. But anyway, the point is the S&P is the level you want to watch on the S&P right now. Here, let me give you this level here. Is 533. If we break 533, we're going to go down to this level right here, which is 531. If I go out a little bit, you could kind of see where we're at. We're just flirting with highs right now, but there's not much going on. There's just not much going on. Good morning, Terrence. Good morning. So again, the level you want to watch on the SPY is 533 and then 531. On the QQQ, the level you want to watch. By the way, we broke our record yesterday. We had 437 people here yesterday. You're welcome, Adam. I think we made about 90 cents in Amazon in 1 hour yesterday in the pit. QQQ, the level you want to watch right now is 460. 460. And the level you want to watch on the SMH right now, and I'll do the Dow in a second, is right here. And we got a couple of upgrades on semiconductors that I'll talk about now, but they are still down. But the level you want to watch is right here, 250. 250. Now let's talk about the Dow, which has been lagging behind everything. And that's not a good sign. The level for the Dow, we could just extend this line right here. Right there. The level on the Dow we want to watch right now is, and look, I mean, just nothing. Is 38,500. 38,500. And on the upside, the level we want to watch right now is 39,000. So we got 38,500, 39,000 on the Dow. Those are the levels right now that we want to pay attention to. All right. All right. What about the broad market? What about everything else? Well, let's talk a little bit about that. Rodney, brilliant trade analysis on Amazon. I appreciate additional comments. Oh, Rodney, good to see you here. I didn't know you came in. Good to see you. Good to see you. Thank you. Yeah, we're going to be Amazon. The Amazon trade was based on the 8-day moving average pullback, and we call that our accumulation line. Here, I'll show you guys what that was right here. Let me show you. Right here. It was a fast one, but I'll show you real quick. Right here, 1252. Amazon just hit the VWAP to the downside. Let's buy Amazon on a pullback. Take profit on Amazon. It wasn't an hour trade. Yeah, it was. It was a 58-minute trade right here. In at 185.84, out at 186.70. Almost a full point. And then it went higher. It went higher. It went higher. So it was a good trade. Good, Rodney. I'm glad. But that was the A-line trade. We use the 8-day moving average all the time. Cam, how much do you like the accumulation line, the 8-day moving average? Tell folks here how much you love the 8-day moving average. We call it the accumulation line around here. And guys, you'll be hearing a lot more about the accumulation line over the next month or so because we use it a lot. Why? Because, good, Richard. I'm glad to hear that. See, look at that, Roddy. Richard made money. Because it's an algo line. Institutions use it. You know how I talk about the VWAP and the AVWAP as institutional line? They use that as turning points, but they use the 8-day moving average for their algos. That's how they program their algos. So it's very, very important to keep an eye on that line because if you deviate too much from it, you're deviating from where the algos buy and sell. And we'll be talking about, look what Cam just says, my favorite moving average of all time. See that, Roddy? You got a fan club here. You're not the only one who likes that accumulation line. All right, but thank you. Thank you for that. That's very kind of you. All right, so market participants geared up for today's two-day policy meeting. I'm not expecting a lot of volatility today, maybe even quieter than yesterday. Why? Because nobody wants to make huge bets before tomorrow's open and the press conference. Because if you get stuck, you may get stuck. You know what I'm saying? You may get stuck. Airlines. I've been talking about airlines, and again, they're very incestuous. It's like chip stocks. When one airline goes up, other airlines goes up. And also, let's be honest, folks, summer's here. Seasonally, airlines are pretty strong in the summer, and energy prices have taken a big dump, as you guys could see right here in the last couple of months. So it gives a little bit of a reprieve for energy prices. Good, Hiru. Good. I like the 8-day EMA better. Anyway, CrowdStrike, they are going to be added to the S&P 500. Stocks that are added to the S&P 500 are very similar, folks, to stocks that are splitting. Because why when stocks split, they go up? Because more institutions are able to buy them and put them in their index and more shares. Same thing when a stock is being added to the S&P 500. It's got to be added to all of those indices that are ETFs that make up the S&P 500. Yeah, see, look what Kirk says. Look what Sylvain says. Yeah, there you go, Sylvain. We call it the A line, the accumulation line. Oh, look at that. We got the eight-day moving average fan club here. There you go. Good. Yeah, I'm glad you guys like it because we use it a lot here. And we're going to be using it a lot. Walmart rose 1%. That's very positive right now. Very, very positive. So keep your eye on CrowdStrike and Walmart and related stocks like Oracle and Cisco. They're related to CrowdStrike. All right. Federal Reserve kicks off its meeting. They're going to make an announcement tomorrow. 41% of economists anticipate the Fed signaling 2 cuts and closely watch dot plot. That's happening now. If you guys don't know what that is, you could find more information on Bloomberg. They've been talking about it for a very, very long time now. But they're having the dot plot survey. They'll be talking about it tomorrow at the announcement right here at 2 p.m. But that's happening tomorrow. Consumer price index is the big number. The year number is 3.4 year on year, and they're looking at May underlying inflation easing. The number we're looking at, and I'm going to make it really simple for you guys. We're looking at only 2 numbers. We're looking at this number right here, and we're looking at this number right here. Nothing else matters. I don't care about month to month. Nobody else cares about month to month. But year on year and without food and energy. I'm praying to God that this number is 3.5. And notice, without food and energy, they're not even asking for a lower number. So they're making an admission here in their number that nothing really changed. Inflation did not change from a year ago. But it did when you take food and energy out. So they're grabbing, folks, they're grabbing onto straws here. My 5 cents. They really are grabbing on straws here. I think we're just going to keep doing exactly what I hate to say this because I'd love to blame Powell, but Powell has been extremely transparent and he hasn't been squirrely in a while now. So again, now we have an 8%. Can you imagine there's still an 8% chance that they're going to cut their rates at the end of July, which I think is silly, and a 50% chance that they're going to cut their rates in September. I'm thinking November, but I think the odds of them cutting in September should be maybe around 15 to 20% right now. I don't think that it's completely crazy because things can change between now and September, but I don't think things can change between now and July. And I think the Fed has already kind of set its tone for that, and they don't like to go back. They don't like to go back and forth, especially one meeting to another. Oracle's reporting. Don't underestimate this stock, especially with low liquidity right now. Europe is down 74, extending Monday's losses. I think this is one of the biggest reasons why the market is down right now. This is why I want to spend a little time on this. When I say the market, I mean the market overnight in the US. Concerns over political upheaval in France. My daughter's in France right now. My 20-year-old and her boyfriend and her grandmother are in France right now. It's the first time my daughter's gone to Europe. My 20-year-old, so I'm a little concerned about her. First time she's out of traveling to Europe without daddy. Anyway, bank stocks led the decline on Tuesday. The official national statistics report said that wages in UK continued their robust growth, but Britain's unemployment unexpectedly climbed. I'm telling you, I think I think Britain wishes they didn't exit. My 5 cents. Meanwhile, European Central Bank's Lagarde stated in an interview that the central bank might keep its key rates unchanged for more than one meeting while awaiting confirmation that inflation is moving towards its target. Sounds very similar to what we're seeing here. Yeah, you may be right on that, Greg. It could be yeah. Yeah. We'll see. We'll see. We'll see. China's finally open. They were closed for 2 days, I believe. Lower today as trading resumed after they have a festival. Worries about sluggish property sector uncertainty outlook weighted on sentiment. Shares linked to electric vehicle makers. Now listen to this. Slip on Tuesday due to concerns that more countries might raise tariffs on cars imported from China. I don't know whether that will impact. I don't know if that will impact Tesla or not, but I do want to watch Tesla on that. Tesla has been dead. I mean, it's just been dead in the water. It hasn't been doing anything, and it may continue doing that for the foreseeable future till we get a catalyst. Japan closed, hitting a 2-month high while investors are looking ahead at U.S. Both Fed and Japan later this week. Gains in machinery and chip stocks offset losses in brokerage and shipping stocks. Yeah, there you go, Eagle. That's me. Yeah. So that's the fundamentals. The only real upgrades or downgrades we had that you guys need to pay attention to is Lilly. I've been liking the healthcare sector, and they're having some updates on their Alzheimer's drug. All right, that's the broad market. What about momentum levels? How are momentum levels looking? Momentum levels are not looking that bad. You've got about 120 stocks making a 90-day high, so there's a little bit of momentum to the upside. There's very little follow through to the downside. But as I mentioned yesterday, downside stocks have their own natural momentum because fear is a stronger emotion than greed. So to the downside, it's not that hard to create momentum. You just have to be right on your position. But we're starting to get over 100, so we are starting to get a little market breath coming into here. And if the report is positive tomorrow, we could see more follow through to the upside. Also, notice the type of stocks that are making 90-day highs right now. The QQQ, S&P 500, Ultra Pro QQQ. So the fact that these indexes are making 90-day highs is telling us there's still plenty of liquidity. Bicycle trip across Europe. Rochelle, you crack me up. When is it added? When is what added? Angie, can you be more specific? But the bottom line is we're still near the highs, and we have to respect that while we're making new highs on the NASDAQ, even if the market has low volatility, you still have to be very, very careful of the short side, okay? Very, very careful of the short side. So there is some momentum. As far as sectors and whether they're balanced or not, we're about to get into our stocks. Just give me one more minute. We'll get into it. CrowdStrikes, it mentioned it. I don't remember. It mentioned it here. Let's see. It mentioned it. I think it mentioned it. Let's see here. June 24th. June 24th, which is only 2 weeks away. And that's usually a pretty bullish sign, by the way. All right, where were we? Oh, yeah, sectors. Do we have balance right now? Well, semiconductors are leading. Tech is following it. Healthcare, these are completely aligned. Look where consumer discretionary communications are. They're not apart from each other. They're fairly close to each other. If you took the S&P and the healthcare out of here, this would be in line. You would have semiconductors, technology, QQQ, consumer discretionary communication. That would put them completely in line. Completely in line. So things are not out of whack right now all that much. Notice consumer staples move down. All you would need to do is move healthcare from here. I'll even forgive the S&P 500 because it has a little bit of both. But we're not that off. How does that happen? This is how it happens. No choppiness, developing value, building value. Look, you have no movement. No movement, they will start coming into balance fast like that. You start exhibiting value, they'll start moving out of line. So I want to show you how fast they can potentially move into balance and why it's important to see how they're in balance. They're not perfect right now, but 1, 2, 3, just move this sucker right here, and you've got almost a full balance right here. And right here, except Bitcoin, which kind of it does its own thing. You've got energy, financials, material, utilities, retail. These are blue or chip stocks. Tech, speculative, blue chips. So again, look, mid caps and Russell 2000 are even next to each other. It doesn't take a lot. Remember what I always used to tell you, that typically markets are a lot more balanced than they were. This is the first time in months that we're seeing this. First time in months. It's also summer. So this is a lot more balanced. And when they get balanced, they can move. Okay. So they develop value, they exhibit value. They develop value, they exhibit value. Those are the only two things markets do. All right. So we don't have a bad trend right now. We just have a lot of unforeseeability right now. Let's now talk about stocks that are on my radar, and I'll let you guys know. That's right, Thomas. And if I see more stocks hitting the 8-day EMA, I'll let you know. X-ray. Let me just pull this here. Just demo. What a beauty. By the way, look, 8-day EMA right there. Below, just coming down right there. X-ray, MNST. Still touching the 8-day EMA right there. These are all shorts, guys. These are all shorts. A little overextended. We want to wait for this one to come back a little bit towards the 8-day EMA. Yeah, Elon Musk criticizes everybody. He should criticize his own company. We want to wait for this one to break the 200-day. We don't want to do anything till it breaks the 5130 level. Not yet on this one. Fast. The stock is moving fast. We've never talked about this one here before. Wait for it to come back a little bit towards the EMA, but I think it wants to start coming back down again. Stanley Black & Decker coming down. Molson Golden. Yeah. Look how it's just touching the 8-day, runs away from it, comes back to it, runs away from it. EL. Thank you, Eric. I appreciate that. Look at that. Eli Lilly. Chicago Mercantile Exchange. These stocks are breaking down, folks. All right. One more, and then we move to the long side. I don't blame you, Roy. If I got up in LA time right now, what is it, 5:45 in the morning or something, I would need coffee too. These are all stocks that are going down. Now let's talk about the upside, okay? Micron is still in play. I still like the SMH sector. We're going to ride this as long as it keeps giving it to us. Right, still pretty close. Here, look, it moves away from the 8-day EMA, from the A line, accumulation line, and then it moves right back towards it. Yes, EL, Estee Lauder, that's right. T-Mobile. T-Mobile's not looking bad. A little deviated, but I like consolidation. If it just sits here for a few more days, the 8-day will catch up to it. But again, we can't be too picky right now. There's a lot of breakouts. Look at that. Nice break, still touching the 8-day. I think this stock is getting added to the S&P 500 or already is added to the S&P 500. But I like this stock a lot. Go, Daddy. Food again. Remember, we've been talking about this stock on and off. Coming back to the 8-day EMA. See that? Look at that. BK. Bank of Mellon. Financials, by the way, should do okay regardless of, unless the economy is slowing down, financials should do good even if rates are going up, by the way. BJ's. There you go. Everybody likes BJ's, right? APD. A little overdone. I would wait on this, but I like how it's breaking up here, especially breaking the 200-day line. Hood, Robinhood. I gave you guys this stock a few weeks ago, or maybe even less than that. I'm still liking it. And a lot of folks are asking, is it a financial stock or is it a tech stock? It's got a little bit of both. BSX, here we go. We've had the stock on our list at least 30 times, 40 times. Look what happens every time it hits the accumulation line. Look at that. I love this moving average. All right, folks, remember something. I'm going to be live. I'm going to be live in an hour and 15 minutes talking about the markets. I'll also be live again at noon in my VIP room. If you guys want to catch some red meat, some gap trades, and if you guys want to see how, I'm going to show you exactly how I got 10 winners in a row. Now, I know you guys don't sound that impressed because we have a 95 point something win rate at the pit, but I'm going to tell you, swing trades with a 10 out of 10 with a 100% win rate in the last 6 months. Swing trading gaps. I'm going to show you exactly how I do it. Don't miss out. 10 o'clock, go to rogerscott.com/training. And don't forget to visit Cam at Customer Service Live from 10 a.m. to 1 p.m. And I will see you guys later. Thank you for making this a wonderful day as always. And I will see you guys later. Bye, everybody. Good, Eagle. Bye, guys. I hope I'm helping you make money, and I hope you made money on Amazon yesterday. Bye, everyone. Roddy, thank you for joining us. Cam, thank you for joining us. Everybody, thank you for joining us. Bye, guys.